planning alone, it is possible to beat almost 98% of all traders that are actively trading the markets. It is surprising that many traders do not do a very simple ritual post the market. The intention of these videos is to share or outline the process of one such ritual, which at its very basic level most traders can include in their day-to-day activity, and hopefully they will profit from it, but most importantly they will see the benefit of going prepared in the market in this fashion. So once again, I have the Nifty 50 chart in front of us. This is set up on the hourly time frame, and this is the price action as it has unfolded today. We will follow the steps that we have outlined and discussed in the previous videos. So I will simply take the text box and give the order of things that we have to check for. The first thing that we are basically checking for is the ADX, and the rules are simple. If ADX, so I'll mark this here, if ADX is greater than 25, then we are claiming there is a trend, and in such a case we are buying the options. If ADX is between 20 to 25, this is a case that we will discuss, and if ADX is less than 20, then in such a case we will say no trend. And therefore, if someone is interested in trading no trends or ranges, then they will write options. At the value of ADX between 20 to 25, the information is do not trade. Basically, the market is not yet decided of whether it's going to trend or if it's going to range. It will usually be at the edge of a long-term range, and it can cause tricky price actions, and therefore I use this as a filter of not to trade, basically no trade. So these are the three cases that we have for the ADX. That is, either the ADX is actually trading above 25, in which we will see that the security is trending and the plan will be to buy options. If it is trending in the upside, we will plan to buy call options. If it is trending on the downside, then we will plan to buy put options. If the ADX is between 20 to 25, then we will simply not trade. There is nothing to assess. And finally, if ADX is less than 20, then we will assess that there is not a trend, which means that the market is currently ranging, and the plan will be to write options. So let's have a look at the price action as of today. The ADX has been set, and we will see that the value, which is on the bottom right of this chart right here, is at 17. In other words, it is meeting criteria number 3 today. So let's understand what do we do when criteria number 3 is in use. If criteria number 3 is in use, that is, we are discussing the third case here, the first step is the rule of 6. So we are going to use the rule of 6 here. So the rule of 6 basically means that a clear high or a low for 6 candles or more can be assumed as a pivot. Alright, so the rule of 6 is basically saying that a clear high or a clear low for 6 candles or more can be assumed as a pivot. So let's just zoom into the price action, and we will see that this high of 22,573 has been consistently in play. Today 22,575 was created, so let us ignore this high and focus on this one, which is 22,594. You will see the values on this part. So once the cursor is here, you will see 22,594.15, which is approximately 22,600, which is where I will mark the first horizontal line and give it a blue color. And indicate that this is the high of the range. And why is it a range? Because as discussed, the ADX is below 25, sorry. Similarly, once we see the low, we can clearly see that this low of 22,316 has held for a sufficient number of time, and even today's low is of 22,350. So it is safe to say that because strike prices of an option will always be rounded off, so we will obviously have 22,300 as the bottom of the low. Now you will note that this blue line has been in play for quite some time, and just put this here, has been in play for quite some time, and for quite some time we have been giving the trade that because we are planning to write, the idea is to write the 22,600 CE and the 22,300 PE. And the reason is self-explanatory because of this, because of the range definitions that we are getting. That whenever we are getting a range definition, that is because the market is ranging just now. It is not our job to predict that it will break the range tomorrow or day after tomorrow or anything of that sort. It is ranging just now, so just now we will have a plan to trade the range. We can clearly see that 22,600 as a strike and 22,300 as a strike has been comfortably held. We are seeing the ADX value below 20 also. So because of this, we understand that 22,600 and 300 are the range of interest, and our objective will obviously be to sell it at the midpoint, which is 22,450. So I'll just make this, I can take the extra effort and simply put this here, 22,450. So 22,450 would be the value at which I would react in the market. I will remove the ADX indicator since the work of this indicator is done. And currently we will see that the market has closed at 22,518, which is roughly 68 points, 70 points above the midpoint of the range. So this is basically giving me a clear case for the trade plan for the next trade session. The trade plan for the next session would be, so let's consider the 4 cases of opening that are possible. One of them is a strong gap up. So case number 1 is a strong gap up. Case number 2 is a strong gap down. Case number 3 is a flat positive. And case number 4 is a flat negative open. Now obviously a strong gap up for us would be that the market opens up at a value greater than 22,600. That is, the market opens up at a value greater than 22,600. Since it has opened beyond the range, our assessment for the day will no longer be applicable, and therefore the plan will be to there cannot be a trade since the market has created a high above the high of the range that we thought. So obviously the ADX, which is at 17, will move towards 19, 20, 21, 22, and at that point we do not want to trade anyways. So if there is a strong gap up, we will not trade. Similarly, if there is a strong gap down, which means the market opens below 22,300, once again there will be no trade. Now the market's current closing is 22,517. If it is flat positive, so we will have to wait actually for it to correct by roughly 75 points to come to the level of 22,450. So which means the flat positive and the flat negative, flat positive would be wait for intra pullback to 22,450. And if it is a flat negative, then once again the same instruction will be there. That is, we have to wait for the intraday pullback to 22,450. Now just understand that if the gap down happens and let's say it opens at 22,400, in such a case we will have to wait for the pullback to go up till 450 for us to be able to do the plan being writing the 22,600 call and the 22,300 put. That is the plan. That is what we want to execute. We are just looking to execute it at 22,450, and since the market, as we can see, has closed at approximately 520, it needs to correct by 70 odd points in order for the trader to hit the sell button on these two options. Now you will further see that how for several days we have had this blue line, and how for several days these highs have not been tested and the lows have not been tested, which means for the last couple of days every day writing the options in general would be reasonably profitable at the midpoint of the market. It is also possible that someone would take the effort and buy the option at call option at the low of the range and then sell or buy the put option at the high of the range, etc. It is possible, and if someone is behaving like this in a flawless fashion, then of course they are making some money. Whereas even a well-planned trader who is just simply entering a notification that on the spot levels of 22,450 in order to hit that sell writing of the call and put options is also making a few points. Point being that whenever the market gets into a structural range, there is little scope to make money. There is a lot of work required in order to a lot of work required, and the scope of making money is less, and therefore I have personally been of the view, that is my personal view has been, that whenever I see ADX below 20, I personally just simply do not trade. I do not trade that security when I'm using ADX as a tool on the shorter time frames in order to get a um, in order to make a plan. So here I'll just write, this is my personal. But what we have discussed is obviously a very practical and a theoretically consistent trade plan. You will notice that over the last few videos we are keeping the same set of indicators, and we are following the same set of steps, and whether you are interested in Nifty, Bank Nifty, ICICI, any other security in the country, the intention is that you follow a set of steps which is hopefully logical to you all, and repeat the assessment. Under none of these videos, even though we have, you could check the last 8, 10, 15 videos, we have consistently been in the right direction of the market, and on this time frame, and we have not made a single forecast. That is, we do not make a prediction that tomorrow the market will break 22,600 and then will go on to go all the way to 22,900, for example, or make a vice versa a prediction, because prediction of course is not a part of the process. Only we are simply looking at where the market is right now and making a plan as per it. And if tomorrow the market changes its trend type, which means it indeed goes to 22,900 or 22,000 on the downside, we will wait for the indicators that we have selected to reflect those changes and then make a plan accordingly. Just a reminder is that the video that we created on Friday, we did mention that whenever a market gets into a range, it tends to break in the direction of the preceding move. And since the preceding move, as you can see, preceding to this particular range has been on the upside, this is the preceding move that has happened prior to this range has set in, there is a greater likelihood that the market will continue in the direction of the preceding move. This is you could say an adage, or something that I learned during my days of study from some textbooks. So Thomas Bulkowski in his books also mentions that whenever the market is gets into a range, it breaks generally in the direction of the preceding move. And we had just mentioned this because the market was obviously going to be on a holiday for Holi, and there was a long weekend, and therefore we were mentally prepared that in the odd case we see a gap up or a gap down, in which direction the market is likely to go. We had the exact same levels, 22,600 and 22,300, even in the prior videos, and we can see that the market, after gapping down in the open, reached in the first hour itself at 22,450, at which point the trader would have hit both the call and the put option sell, and the market has pretty much closed flat. In other words, once again breaking even to minor profits for such a trader. With this, I think we have relearned some of the concepts that we have discussed before, and most importantly got some more clarity on when to apply the rule of 6, that is when ADX is trading below 20, and the plan of writing the options at the midpoint of the range, because obviously the intention is to promote discipline, patience, waiting for the level, and of course to have a certain level of simplicity that people can actually do it. And therefore we are discussing all of this on a single time frame kind of a method. For those who are interested in learning more, then it is my view that even doing this you would be able to beat 98 percentile of the traders, but the higher income traders will obviously come towards the top half percentile, and the distance in terms of percentile is not much, but the distance in terms of practice, dedication, effort is maybe 100 times more. So those of you all who would be interested in learning more, I have shared some links with you all in the description, which you can check. If you watch those videos alongside this routine commentary whenever I get the time, I'm confident you will start internalizing most of the concepts that we would have discussed there. With that, I wish you all the best. Thank you.